Welcome to the Daily Insights That Matter. Now, the electric two-wheeler industry has been significantly impacted by the subsidy cuts, as demonstrated by the shocking 62% fall in the daily sales which was observed in the month of June. Let's discuss this today. Now, the government had reduced the FAME subsidy starting from 1st June to a maximum of 22,500 rupees from the earlier limit of 60,000 rupees, thereby resulting in an increase of over 20% in the price of an EV. Now, for example, if a customer bought an electric two-wheeler of 1 lakh rupees, earlier they would receive a 40,000 subsidy, but with the new incentive structure, they would now only receive 15,000 rupees with a price rise of more than 20%. Now, as a result of this move, electric two-wheelers witnessed a significant drop in the daily average from 3,395 sales in the month of May to 1,271 sales in the month of June, which is a staggering drop of 62%. Petrol two-wheelers, on the other hand, saw a slight rise of 4% at the same time. Surprisingly, electric three-wheelers and electric four-wheelers saw a healthy rise in sales in the month of June so far. Now, June is expected to be the worst month for the EV segment, as it is the first month that has had the subsidy cuts implemented. Now, due to this, the EV manufacturers have now started pricing their vehicles higher, much above the price range of the traditional petrol two-wheelers, making EVs look less attractive for potential buyers. Though the EV sales have crossed the 1 million milestone, subsidies have not crossed 50% of its mandated target, as some of the manufacturers were found violating the FAME guidelines. Now, the government's goal is to make the industry more independent by gradually phasing out the subsidies, and hence the industry is expected to face some constraints in the near term. Now, one major indicator of economic recovery within the country has been the jump in the direct tax collections of the government, which has shown steady growth. Now, India's net direct tax collections for the first quarter of this fiscal till 17th June is up 11.18% compared with the same period in the last fiscal. Now, the total amount collected stands at 3,79,760 crores, showcasing robust growth and positive revenue trends. Now, this surge in direct tax collection reflects the overall economic growth and increased tax compliance. Now, based on the initial trends, the collections are in line with the Union Budget's projections for the fiscal year of FY24. Now, the Union Budget had projected a rise in the direct tax collections by close to 10.5% compared to the last fiscal year, indicating a steady and an optimistic outlook for revenue generation. Additionally, the advanced tax collections for the first quarter of this fiscal year, that is FY24, have shown remarkable growth, reaching 1,16,776 crores as on the 17th of June 2023, which reflects a double-digit growth of 13.7% compared to the same numbers in the last fiscal. Now, the notable rise in both the centre's direct tax collections and the advanced tax collections for the first quarter highlights the positive momentum of India's economy. Now, the double-digit growth in the centre's direct tax collections for FY24 provide reasons for optimism amongst policymakers. Now, this early success in tax revenue correction allows for sustained public spending without significantly widening the fiscal deficit, which is particularly beneficial in an election year. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com